Hey traders, Jason here from Leavitt Brothers. The market has been basing for almost 3 weeks, but I'm starting to see some evidence the tide is turning up. In this video, I'm going to show some 60-minute charts and how they've started to act well around their 50-hour moving averages. Okay, so here's Micron. Okay, you can see this is an hourly chart. The blue line is the 50-hour moving average. You can see support here, resistance here, more resistance here, and then support here. This is a pretty good sequence of events for a moving average to establish itself as being significant, where it acts as support and resistance numerous times. When the stock falls, it'll then base, and during the base it'll oftentimes trade above and below the moving average, but then in this case where it goes above the moving average, comes back down and tests it as it did yesterday, and then moves up and makes a higher high. That is evidence that the tide is turning and that the move down, which then neutralized in a base, is starting to turn up. So right now, Micron looks good, and as long as the moving average could curl up and the stock can hold above the moving average, the path of least resistance will be up. Okay, first target will be the 200, the 200 on the hourly chart, and then we'll reevaluate after that. Here's Square, beautiful chart. Okay, again, hourly chart with the 50-hour moving average. You have support, support, support. It trades below support, then gets pushed down by the same moving average, gets pushed down again, and then it got above the moving average a couple days ago. This is a really good sequence. You have a moving average which proves to be significant. The stock bases, gets rejected, comes back down, gets above the moving average, then comes down and tests it from above, and then comes up and hopefully takes out a resistance level. This is a really good sequence of events. Okay, this is exactly what I would look for when considering playing a stock coming out of a base. Right now, the stock is flirting with the previous high. It's doing okay. As long as the moving average as long as the stock can stay above the moving average, I think dips are going to be viable. Eventually this resistance level will be taken out, and this thin area here, you can see between 50 and 51, will be taken out. So my first target is like 51, and as long as the stock can stay above its hourly 50, the path of least resistance will be up, and dips will continue to be viable. Here's Alibaba again. Hourly chart, 50-hour moving average, support, support, resistance, resistance. The stock gapped above. It doesn't look like it's building strength here. I wouldn't be surprised if it came back down to the lower 170s to test this moving average before moving up and taking out these highs at 178. But this is a good first step. You often see this, okay? Stock trends down for a while, gets above the moving average, then it needs to spend several days, sometimes several weeks, resting, regathering its strength, and then as long as the moving average can curl up and act as support, it's a good trade to the long side. Here's Krill. Krill has not necessarily used its 50 as support and resistance, but the 50 has still been a pretty good guidance for traders. Be long when it's above its 50, be short or be out when it's below its 50. Last week it took out its 50. You can see here, came down and retested it twice, came up, came down, and I wouldn't say this is a retest because we're 50 cents away, but it came down and now moved back up, and now it's near its high. So again, as long as Krill stays above its 50, I would say the path of least resistance is up, and I think we can easily have a move up to the highs from last month. Okay. Here's Apple. Sloppy, but still somewhat telling. Resistance here, resistance here. We got support here, support here. You can kind of see a smiley face forming. Okay, as some people say, buy smiley faces. This is a smiley face. You can see the 50-hour moving average coming down. Now it's curling up. Now the stock is above its 200. Okay, we have resistance here at the 200 plus previous highs from here and here. Okay, so as long as the 50 holds, eventually resistance here near 175 is going to get taken out, and once that happens, we're probably going to get a move up into the 180s. I'm guessing like 185-ish. Here's Microsoft acting similarly. Okay, resistance here, resistance here, resistance here, Now we got a little bit of a smiley face forming. As you can see, the moving average came down and now it's curling up. Support at the 50. Highs have been taken out. Okay, so we should be clear sailing up for a couple points. Netflix, I'm not in Netflix, but I'm just showing it as an example. Stock trends down, jumps above. It's 50 on the hourly chart, spends a week consolidating. It's got to rest. It takes a lot of effort to get above the moving average, so it's got to spend several days resting, recharge its batteries. The hourly moving average, the hourly 50 moving average starts to curl up, and then it jumps again. Okay, so now it's trading. Now it's flirting and trading above and below its 200 hour moving average. Okay, as long as the 50 holds, dips can be bought for a move back up into like the 320 area. Okay. Here's Spider. Okay, so anyways, as far as these stocks go, okay, the list is long. I'm seeing many strong stocks which pulled back. They're now starting to turn up. Reclaiming their hourly 50s is a good first step. Okay, there are no guarantees, not with all the headline risk and all the political garbage going on in the world. But if these moving averages can hold as support, bias will shift, from being neutral to being up. Okay, here's the here's SPY. Okay, the SP 500 ETF. You can see it got rejected here, got pushed down here, got above the moving average, came below the moving average, got above the moving average, and then used it as support. Okay, so as long as this acts as support, the trend, there's a good chance the trend is going to turn up. Okay, this sequence of events is something that is really powerful. For it to get pushed down several times by a moving average, then go through a basing period where it trades above and below the moving average. Then once it gets above the moving average, it uses it as support and then springs up. That's a good turning point. That's a good reversal play. Okay, looks like we have some resistance here at like 267 back here, even today. Plus then we got the 200 moving average up here between 267, 268. So as long as the 50 holds, if we can get through this resistance zone here between 267, 268, we should be clear to leg up. I don't know how far we'll go, but we should at least get a really good tradable leg up. Okay, one more chart. The Qs, Nasdaq 100 ETF, similar. Okay, got pushed down by the 50, traded above and below the 50 over here over the last 2 weeks. Now we're above the 50. The 50 is starting to curl up. Okay. This is just evidence, okay? There are no guarantees, okay? Who knows what's going to happen? But if you're looking for some evidence behind, beneath the surface that the tide is possibly turning, here you go, okay? That's all I have for right now. Come check us out at Leavitt Brothers, leavittbrothers.com, leavittbrothers.net. We can help you navigate the market and make money. Come check us out.